welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special edition on budget stocks under NDA nomics right ahead of the union budget. Where is it that you should be keeping your focus? Now today's edition will focus clearly on the real estate, housing finance, affordable housing sector. Remember, with the union budget now set to be tabled in July end and we're just about a month away from the space, the real estate sector has renewed hopes for reforms agenda that could be laid out by Modi 3.0. What are the key expectations from the real estate sector? Will the affordable housing finally receive a boost that it really needs? And should you as investors now look at real estate linked stocks in your portfolio right ahead of the union budget? We will try to find out all of this and much more. Joining in on this special edition with me are two very special guests. Siddharth Vora, Head Quant Investment Strategies and Fund Manager PMS Prabhudas Leeladhar is with us. Also joining in is Mr. Abhishek Basu Malik, Founder and the Chief Equity Advisor of Intel Sense Capital. Welcome to both of you guests and thank you so much for taking the time out. But first up, let's listen in from our colleague Chetan Bhutani as to what can we really understand as to what are the key expectations from the real estate sector, what are they expecting from the union budget, what are the areas that the government should be paying attention to. Take it away, Chetan.
Well, Sakshi, three key expectations from a Modi 3.0 is what the real estate sector really wants from the union budget. First, experts are saying that these anticipated budget reforms, which have been usually announced in the budget, should actually be implemented on the ground. First, for example, there has been a lot of demand from the industry to give an industry status to the real estate sector, which will actually allow to catalyze growth and, of course, bring in more opportunities for investment in the particular sector. So the industry status is one of the most key and a long-awaited demand for the sector. In fact, secondly, the focus on affordable housing should come back, because remember, Sakshi, that post-COVID, the decline for affordable housing actually declined, and of course, the people not having much of disposable income in hand, there was an issue with respect to having affordable housing, and the government actually could not revive it as much as they wanted to. Secondly, the credit-linked schemes that the government was in fact planning to come out with, which got hit during COVID as well, and due to COVID, government did some announcement for the industry in particular, but yes, real estate sector could not see a revival. And also, third, the metro cities, tier 1, tier 2 cities, where the real estate is getting more expensive, for example, like Mumbai, the government really wants to, the industry in fact really wants to have a much more easier approach to having prices being curbed down. Fourth, what really is the demand is the GST under they're bringing the real estate under GST, which will definitely bring down prices, bring affordable housing to more upfront, easy basis. So clearly, these 3 to 4 demand is what the industry is expecting out of the union budget. Back to you.
All right. Thanks a lot, Chetan, for bringing all those big expectations from the real estate sector from the upcoming union budget. Let's wait and find out whether all these demands are met or are these put at the back burner. And let's also understand what will happen in either case for the real estate sector and for investors. What does it really mean for an opportunity and scouting for some stocks that are linked into this sector? Let's start off with Siddharth, our guest joining right in. Siddharth, you heard Chetan really talk about the big expectations right there. Do you think is real estate going to be on top radar as far as Modi 3.0 or NDA nomics this time around under the coalition government is concerned?
So we actually manage the portfolio in a very different way. We only look at mainly quantitative parameters, which covers say fundamentals, valuations, sector strength, risk, etc. Uniquely so this time, for the last close to 8 months, we maintained a weight of close to 8.5 to 10% to the real estate sector. And we also do believe that a shift from unorganized to organized is really happening in the real estate sector, and supply side constraints are actually moving a lot of unorganized small builders out of the industry, and the market is being consolidated by larger well-established brands which have strong land banks, very strong execution capabilities, and of course they are moving from a very asset heavy model to an asset light model. So I think real estate is going to be a very relevant play in this upcycle, and we continue to own some key names in the real estate sector.
Okay, we'll come back to you, Siddharth, for more details on that. Let's also get in our first reaction from our other guest, Abhishek Basumalik, right in. Warm welcome to you, sir. Just like how we are discussing, of course, the key expectations on the one side, Indian housing sector has definitely seen the sales growth, newer launches, takeaways, at least in the premium segment of late. But it's the affordable housing segment that has seen a decline post-COVID clearly. In fact, according to an ANAROC research report, the sales share of affordable housing dropped significantly after COVID-19, falling from over 26% that was seen in 2022 and around 38% in 2019 to just about 20% in Q1 of FY24. So there has been a consistent decline on that front. So where do you see the government's focus is going to be lying? Is it the affordable segment that will garner more attention this time around?
First of all, good morning to you and all your viewers. I think, see, it's not that post-COVID the situation has changed. If you see affordable housing, even with all the hoopla around it, has never really taken off in India. One of the reasons is that, slightly expensive houses, there's a very large market for that, which is the middle class and the upper middle class and above. But the affordable housing that is targeted for, say, the lower income households, the challenge is that even at that level it becomes not very affordable, right? So most of the people in that segment actually end up looking for subsidized housing that the government programs run. Now, if you keep that in mind, I think in this whole theme that you're talking about today, the bigger beneficiaries or the more secular beneficiaries would be people who are suppliers to the housing and the real estate play. So it could be people who supply money to the buyers and the builders. It could be people who supply raw materials like steel, cement, etc. And it could be people who supply, the tiles and the ceramics and the sanitary ware and the plywood and that a person would need while the building or construction is done or after you take possession of a flat. So I think that space is more interesting rather than pure play builders, because in India the challenge with building still persists to a large extent. I've been speaking to a lot of promoters of companies who are in the building, construction, real estate space, and land bank, large land banks. These are still challenging. There are still challenges around procuring land bank and in terms of getting quick approvals, getting the construction up and running. So it's not as smooth as people would like it to be. So I would personally prefer to play it through the other segments, and there is another benefit to it. The other benefit is that you are not segmenting yourself to only low income housing or things like that.
Yes.
If you're playing, say, a sanitary ware, or if you're playing a housing finance company, then you have access to the entire spectrum. I think that is a much more safer way to play this upcycle.
Perfect. That's wise advice over there, and one should definitely listen to it. That be whatever the segment or the sector comes on the top radar of the budget makers this time around. In case the real estate sector has to boom, in case whichever segment has to boom, it is the suppliers that in any case will continue to benefit more. So maybe the real estate ancillaries, so to speak, so cement makers, perhaps metal, steel suppliers, tile makers, sanitary ware makers, probably, and plywood is something that Abhishek ji just highlighted, and we will drill down a little further to also eke out some names from him within this space also as we go forward into the discussion. But let me bring in Siddharth right here. Siddharth, you talked about valuation, so I will come on to that. Real estate sector has been the top performing sectoral index on the stock markets in 2023, in FY24. and we continue to see a lot of action with the way more orders are flowing in, more land is being purchased, more houses are going under sale, at least in the premium segment for a whole host of these companies. Not just the large caps, but even the mid caps have been performing way too better. Stocks like macro tech developers, Prestige Estates, Godrej Properties, Sobha, they've all had a dream run over the last 1 year. You can actually see the index return itself is about 115% over the last 1 year. So one can definitely see that there has been enough and more investors' interest. Valuation wise, where do you find comfort within the entire real estate ambit, and where should investors be keeping their focus in?
So I think looking at valuations alone in isolation is probably not the way to invest in such deep cyclicals like real estate. I think real estate cycles last anywhere between 5 to 10 years. So when we are coming out of a slump, there is going to be a transitionary period where the valuations might look stretched. And that's simply because of a very high growth that these companies are expected to experience. And these are largely experiencing operating leverage, which means you're going to see a big profit delta in the real estate sector, a big margin delta in the real estate sector. So the multiples are actually discounting 2, 3 years ahead. So you really need to be cautious of managing valuations, but not overlooking growth as well that a deep cyclical sector like real estate is going to experience. So the moment you put 3 year forward numbers, you're not going to find these valuations too expensive. And the 115% return is also coming probably after a 10-year slump cycle. So it's basically a long-term catch-up that's now happening. So I don't think you should look at valuation in isolation or be worried about them being stretched in the transitionary phase of growth expanding.
Okay, we will hold that thought and I'll come to you with specific names right there to help us understand a little more detailed answer on that one. But Abhishek, like you were pointing out, several sectors that you've indicated are likely to benefit more from the government's focus in the entire housing space, be whatever is the measure that really comes in, because the expectations are far and wide. Just like how Chetan was also mentioning, there is a call for an industry status, there is a call for widening the affordable housing definition as well, including that 75 lakh rupees houses and 90 square meter, all of that, a subsidy for kacha homes into pakka homes. There is enough and more expectation, but we do not know how much of it will get translated. But just like how we were talking, that whatever comes into the budget, it is the ancillaries that are going to get benefited. If you could tell us, a slew of the names that you are looking at, both from fundamental earnings valuations perspective, where investors can continue to buy in even now, because a lot of investors are feeling FOMO, that after having seen a sharp rally, where should one be really investing within the real estate ambit?
So I think, like Chetan just mentioned, a real estate cycle is usually, it lasts fairly long, and we've just probably seen a year and a half, and it is most likely to carry on for at least another 5 years, if not longer. I'm just trying to be a little bit conservative because cycles have tended to become shorter. But at least another 4 or 5 years is what it should normally go on for. Now, if you see that let's look at, say, the housing finance companies. There are a lot of housing finance companies. If you look at the larger banks today, HDFC Bank, etc., they are actually good options. But even there are a lot of specific companies which are doing housing finance, say a Canfin Homes, maybe a LIC Housing Finance, maybe Aptus, and just GIC Housing. All of these. Just as a disclosure, it's best to realize that any stock I talk about is we have a vested interest in that, or we may have a vested interest in that. Right? None of these are recommendations to buy or sell. But having said that, so taking a look at, say, an Aptus or a LIC Housing Finance, a Canfin, who are specialized players in housing finance, or you go with HDFC Bank, which now also incorporates HDFC, which is a player across the spectrum, right? So that is if you look at the housing finance side. If you look at the sanitary ware, which is where I personally like that space the most. And one reason I'll tell you is, there's very little difference between, say, a sanitary ware or a tile maker or a plywood. But think about your own house, right? The only place where brand is visible out of all this is the sanctuary, right? Everywhere else, a tile, you can, once you put on the tile, you cannot figure out whether it is, from company X or company Y. All of them look the same. Similarly, plywood, uh, once you make the furniture, everybody looks the same, right? The only place where it's different and where brand has some play, where brand can get you slightly higher valuations, is sanctuary. And a player like Sarah or a Somani is actually doing quite well. So I would say these are the good places. And obviously the other end of the spectrum is cement players. I think the standard big cement players like Ultratech, even a small player like Sagar Cements, which is located in and around Andhra and Telangana, which is likely to see a lot more of growth due to Amravati build out. So that could be another Sri Cement, Ultratech. So those kinds of stocks could also look interesting.
Okay, so thanks a lot for all that list. And in fact, interestingly, it's the cement day turning out to be that one because it's the entire sectoral focus right there, from Ultratech to India Cement to JK to Ramco, you name it. And I think all the stocks within this space are having a sharp run up in trade today. And Orient Cement, Heidelberg, JK Lakshmi, Prism Johnson, you name it, all these stocks are up. Even the smaller ticket ones are very, very small. Burnpur is up 20%. India Cements, that's a bigger one, that was up about 10% in the morning. It's up 17% now. Very, very sharp run up can be seen across the board. So, and even the ones that you mentioned, Abhishek, so Somani is up by 9.5% in trade today. A very strong move, even being seen in the tile space as well. Let's get in Siddharth to also give us his own sense on the key sectoral performers and outperformers where he is keeping an eye out on. Are you also looking at housing finance names, as Abhishek highlighted, some of these tile makers as well and sanitary ware makers as well, or do you have some other stocks also to add on to the list?
So within the whole real estate ambit, we are only owning a couple of names: Oberoi Realty, Lodha, and NBCC. These are the only three names we own, and NBCC is part of our PSU real estate and infra exposure. And Oberoi and Lodha go in with the broader thesis that I told you, right? Consolidation, the branded larger players will probably take more market share in a cycle like this, where the unorganized players are struggling. And we're mainly exposed to sectors outside the real estate sector as well. The real estate is still like around 8% of our portfolio. Not
Okay,
too big.
8% of your portfolio. Abhishek, how would you really advise an average investor now looking at several themes to be added to their portfolios? How much of a percentage should actually go to these real estate come ancillary space that you really talked about?
uh, it's actually not never possible to answer a question like this, simply because uh, allocation has to be dependent on an investor's own risk appetite and outlook, uh, and the kind of portfolio that they run. So easier thing to do is to have smaller baskets of each of these and play it through that if you're unsure of which one stock to pick. So maybe have a small basket of cement, one basket of
Yeah.
real estate, housing finance, etc.
Okay, so that is a wiser way to really look at the entire sector as well. Abhishek, wanted to also ask you, are you also looking at adding FMEG, for example, within this entire space? Are they also likely to benefit the wires and the cables space? There has been a momentum within this space as well of late. Do you think is this space also, can this be added?
Uh, Definitely, I mean, the wires, cables, they've actually been doing very well, not only because of real estate, but also because of what we are doing in the power distribution area as a
Yeah.
country. I think that build out is happening uh, in a very, very big way. All the renewables that is coming up, all of that requires additional wires and cables. So this will, I mean, real estate pickup will just add to that demand. But I think uh, a lot of these companies, the valuations are probably something where you'll maybe have to think once or twice before you want to add them.
Okay. Anything else that you'd like to add to this, Siddharth? Are you also looking at FMEG with a pinch of salt, looking at the expensive valuations now?
I think we have a very minor exposure to a couple of durable companies,
Mm-hmm.
mainly in the summer product segment. So like Blue Star, Voltas type companies, we have some exposure there. That's about it. Nothing
Okay.
else.
All right. And what about cement? I think we forgot to ask you on the cement space. How are you placed there?
Absolutely, on a day like this, we don't have much cement exposure. The only
Okay.
place we have in the suppliers within the real estate is Pidilite. That's the only name we have.
Okay, got that. So that's the entire cement space as well. But Abhishek, what could be a fair understanding of what the budget could really do? What are the challenges that are existing within the entire real estate ambit right now, and where do you think the government needs to prioritize to keep their focus on?
Uh, Very difficult to answer the question. I don't think that the budget will have too much. I think a lot of people have a lot of expectations. If you go by the history, last maybe many years, budgets have not given out any major policy decisions or policy changes. It's just incremental allocation of funding from one place to the other. So
Yeah.
budget has ceased to be the place where policy decision making is announced. So I personally don't think there's going to be a lot of big announcements in the budget. But I think what
Okay.
is important is uh, to see the allocations, right? Which department is getting what kind of allocation. For example, last year we saw very large allocation to railways. So you could see that, okay, that is where the government is focusing. This year also we will have to see where the big money is being allocated to understand uh, where the focus of the government is. My guess would be it will more or less remain the same. It will be in rural housing, it will be in railways, it will be in infrastructure. I think that's where and renewables, because that's I think one of the first tweets that the prime minister made after the election was about how we should become energy in how energy should be green, and something like that. So I think that would be another focus area for us.
That's a very interesting point that you bring out, Abhishek. So let me get even Siddharth to talk about it. Renewable space and especially rooftop solar, where Prime Minister's focus has been. Is that an interesting space that you're looking at? Because that also would come within the entire real estate space too now, that the government is looking to modify households with solar projects.
So we're actually not just bullish on and probably owning green energy or solar energy, the whole thermal power and the whole power transition. We maintain a 10% sort of exposure to the entire energy and power transition story in India. And within that, of course, you can have, more specific names within the solar, or not doing only solar, but a gamut of the entire power ecosystem. So
Could you
we
give
are.
us a list of names that you are already invested in?
Yeah, yes. So we actually own, just give me a second. Actually, I'm not allowed to reveal all the stocks. I think we're only allowed to reveal our
Some of
top five.
them. Yeah. Okay.
Yeah. So they're not in my
Your top
top five.
holdings.
I think. Yeah, I'll avoid speaking about that.
Okay, fine. Well, on that note, viewers, we'll wrap it up at that. Thank you so much, Abhishek and Siddharth, for being with us on this show and helping us really understand what to really expect in terms of the real estate, housing finance space from the upcoming budget, and how should the strategies be. And from a long term, where exactly can investors be really looking at to take benefit of not just the budget announcements, but the growth projections that are expected from within this sector as well. Truly appreciate your presence, Abhishek and Siddharth, on this very show with all our viewers. And meanwhile, you have a record high again on the Nifty. 23,800 viewers is on your screens, 81 points higher, second day in a row, and you do see a sharp move on the Nifty yet again, a 0.3% of a move on the upside. And there you have it, the Nifty is at the high point of the day and is at a record high level, crossing 23,800 for the very first time as well. Let's also look at the key contributors to the Nifty right now within this kind of a move that we are seeing on the Nifty. And you do see, of course, more and more sectors have come into the fold of the green screen. So you have infrastructure, the one that we've been discussing, oil and gas, FMCG, private and PSU banks, IT sector, the Nifty Bank, broader markets, financial services, all contributing to the kind of moves that we are seeing across the board. Within the top stocks that are contributing in terms of percentage and maximum points on the Nifty, it's Reliance Industries' turn. Remember, in the morning we were discussing, yesterday it was HDFC, ICICI, and today it's going to be Reliance Industries. And clearly at that, in the morning, Mitesh also talked about a breakout that happened, and therefore he suggested a buy on Reliance Industries. Now the stock is inched to the day's high point, 1.6% higher, 29.56. You also have ICICI Bank contributing from the front, about 12 odd points. Ultratech Cement, Kotak Mahindra Bank, ITC, HUL. These are the top contributors on the Nifty right now. Across the board, it's the cement pack that is hogging the limelight, with India Cements, Ultratech, Ramco, JK Cement, all of them up into the thickest of action in trade today. So it's the infra boom that we are seeing in trade today. But we'll wrap it up at that. But do stay tuned on to Business Today as we continue to get you all the exciting buzz from the D Street. And 12 noon, we'll be answering all your stock related queries as well. Top market experts will be joining in case you are in doubts on any of the stocks in your portfolio. You can also send in your questions on daily calls. I'll see you at 12 noon.
Shahid Sukhdev College of Business Studies of Delhi tops the list of best colleges for BBA. SVKMS NMIM